All right, I'm David Adams, and this is our Q4 2015 market update. First of all, I want to say happy holidays to all of you before I talk about the stock market and the economy, and also just to say how important I think it is for all of us to focus on our loved ones and the things that really matter, especially this time of year, not everything that I'm about to talk about. Oh, and also in the wake of the tragedies that we saw in both Paris and California, we all need to remember just how precious life is and how precious every day that we're given is. Okay, so now shifting gears to the stock market and the economy. What a wild ride 2015 has been. The market started out strong this year. Then we had that much anticipated correction where the Dow went from about 18.3 to around 15.8, about a 15% drop. And as usual, we started hearing about fear again, mostly from the media. Headlines like, is this 2008 all over again? Or here goes the market back to its all-time lows. But I'm going to continue to reiterate my strong belief that while the market is irrational most days, that over the course of a year or so, it usually tends to rely on fundamentals. 2008 and 2015 are way different in my opinion. Valuations are much different. Right now the markets may be frothy or a little bit overvalued, but not near as much so in 07 and 08. There is a lot less leverage when it comes to debt in the economy with both businesses and consumers, real estate debt and personal debt. And according to JP Morgan, there's a lot more available cash on the sidelines. And cash is always king, and I've been preaching this theme for really the past 2 years. Each time we see meaningful volatility in the market, the cash on the sidelines has continued to provide a backstop to the market and also provide a nice bounce back each time. You look at the markets this year with the S&P and the MSCI Europe and emerging markets, most are flat and really mostly down over the last couple of weeks. So it's been a slightly negative year. But if you really think, given all the volatility and the ISIS fears that really loom, this really shows the market's resiliency. I think it could have been a lot worse. And this is really a strength of the economy, in my opinion. Q3 earnings weren't great for companies. The volatility has certainly picked back up compared to the past few years in the market. And this is all while the Fed had been looking at raising interest rates, which, as you all know, they recently did a couple weeks ago. And these certainly represent some headwinds for the economy and for the market. Also, the strong dollar really doesn't help companies that primarily focus on exporting to other countries. Take P&G, Procter & Gamble, for example. That stock is down this year, and that's mainly because most of their goods are made here with a strong dollar and exported to a weaker global currency. The opposite would be true of companies like Unilever, which I believe is a Dutch company, who really end up producing their goods with a weak euro, and they import them over here to a strong US dollar. It's really hard to see this changing anytime soon, especially with so many governments stimulating their economies by cheapening their currencies. And this is all while the Fed here actually increases rates or is doing the opposite. Crazy fact I came across, Switzerland actually has had negative interest rates. Yes, that actually means that you pay money to the government to safely hold your currency. This is beyond bizarre in my opinion, but definitely interesting times. What's favorable also for this market is, again, the strong dollar for those companies like tech and healthcare that don't export and primarily are growing here domestically. So this really has become more of a stock picker's market, and this is a lot different compared to the past couple of years, so it's a big change. Oil prices are low, the job labor market is better, and these are all good things for an economy where the GDP is primarily or about 70% based on consumer spending. And think about it, where else is the money going to go if it's not going in the stock market? Bonds stink for now, in my opinion. Cash rates are still near zero. I still feel like this bull market really has probably another 2 to 3 years to run, and definitely with some more bumps of volatility along the way. And the biggest headwind, and also my personal and biggest fear for the economy and our personal lives, is really the threat of ISIS, attacks here on U.S. soil and cyber attacks. Even with strong fundamentals, fear is really a powerful emotion that could certainly increase volatility. All we can do there, though, is pray and have faith when it comes to these fears. So I wouldn't make any big changes to your allocations or your portfolios at this time based upon those fears. Maybe if it's a strategic change, such as you have too much cash or too many bonds. And even with the market at a higher point, as it is now, I like the idea of owning high quality dividend paying stocks compared to having an overweight to bonds, especially if you have a 3 to 5 year time frame. And always keep that healthy cash emergency fund on the sidelines. It certainly helps during periods of volatility. And as we approach year end, great time to look at some tax planning opportunities. So maybe selling some stocks or mutual funds that have losses and buying a similar holding that you keep for 31 days, or maybe even rebalancing your entire portfolio to recognize some of those losses, but still keep a very healthy, diversified allocation. 2008 was a big year for tax loss selling. 2015, likely not as much, but I've still been able to find some decent tax planning opportunities with some of our clients. Thanks to all of you who attended our annual client holiday party. It was a very fun and special evening with clients, friends, and family. And I said it that night, and I'll say it again right now, that it's really a special thing to be able to have a room full of 150 people and have a chance to look around and see all of them as part of your family. I got to see new friends being made, smiles, laughs, connections, and really memories being shared, and that's what it's all about. So I'm thankful for all of you. Happy holidays, and that is it for this quarter's market update.